Hey, welcome to Web3 Weekly with your host, Blockstar Technology.
Let's go.
All right. Welcome, everyone. Welcome to episode 51. So we just over the half century now. And I think we definitely had the right guest for this episode, Charlie.
Yep, definitely.
And especially with the current what's happening out there, I think it's perfect timing as well. So hi to everyone from all our social media platforms. And thank you for again joining us and sticking with us for this many episodes, right? And so today, I would love to introduce you to Iraz. So I don't want to say too much, Iraz.
Yeah.
And right, I would let you give a little bit about intro who you are, and I would love for us to hear something, a cool story from you, if you can, so that people get to understand. Oh, what is Iraz wasn't born like this straight away. They get a little bit understanding. Okay, what makes Iraz special?
I was not born with a beard, that's for sure. It's a more recent development. You've got to keep the episode 51 fresh then to
100%.
retain them. You're not going to have a big drop off.
No. Right, it's only going to go up from here.
Yeah. Well, thank you for having me and for having Stables. It's really good to be here. It's been a really pretty significant past few months for us. So excited to share that journey. In terms of my background and story, so I'm one of the founders of Stables, but one of my background is in venture capital, corporate advisory, and fintech. So starting out really investing, advising, or building technology companies or high growth potential companies. And so that's my kind of, and I can shed more on Stables, but in terms of a fun story, I like a bit of a random one.
Yeah,
but also
let's do something random.
As a result of being a builder and my background, I've done any number of things from, taking out the garbage if I need to. But, early on, something that's really notable actually is on my LinkedIn profile, but, it's kind of hidden away, is in my first role when I was actually living in London at the time, and I was working in a family office as like a younger as an analyst, very junior. And we would have, clients or partners that were very, very wealthy people. And a group of them were helicopter enthusiasts. So they were kind of high net worth people who also owned their own helicopter, but they would fly it themselves and like in their garage and hangar it. And along that journey of working in this office, a group of these high net worths kind of did a expedition effectively to the North Pole. So they took 5 helicopters and flew from London and from Moscow to the North Pole. And actually to get to the North Pole, we had to airlift about a ton of fuel into the just north of Svalbard, which was an interesting story in itself. But when these people went to the North Pole, so they flew, refueled on this kind of ice bank in between Svalbard and the North Pole, and then they flew to the North Pole. And what the cool part is that there are actually 3 North Poles. There's the latitude North Pole, so then there's the magnetic North Pole, and then there's the point of inaccessibility, which is the furthest point from any landmass. Wow. And they flew the helicopters there, and then they flew between the 3 kind of North Poles. And as a result, they were the first people to do that in a helicopter, and also the fastest, because historically only people that done that was in a sled with dogs. I helped and the tactical and logistics kind of analysis and getting all their gear and shipping helicopters and planning routes and doing fuel calculations. And, I wasn't one of the pilots, but actually those guys, they set 2 world records in what they did.
Oh my God.
First ones to do that and the fastest. And there's a video, we equipped all the helicopters with GoPros, and on my LinkedIn, there's a video of the 3 North Poles is what they call it. Yeah.
Wow. So you were one of the pilots, did you say?
I was not one of the pilots. That's what I was
Okay.
saying. I was on the ground. Actually, I was in London when they were doing the whole thing.
Okay. So I guess it must have felt like, when they do the Grand Prix, right? There's a whole bunch of like engineers behind the scene at base, like, runs like hundreds of, analysts, right? Behind the scene, just all the management of those vehicles. Was it like that? Was it that glorious?
It'd be the guy who runs everything behind the scene, his like junior helper. His junior helper's junior helper.
Yeah.
No, but it was a lot of fun and very interesting.
Yeah.
But it also has a lot of, and this is maybe an interesting anecdote from that story, actually, is about risk. And I asked one of these pilots when they came back, I asked him,
yes,
you have, not that you have all the money in the world, but like, why are you going and risking your life to like seek thrills when, it's not unnecessary, but how do you justify it? And he said to me, there's obviously risks that you cannot control, but for the ones that we could control, like almost all of the things, like as far as I was aware, like we had tackled them, diligently as well as we could. And so he goes, and so like, and he came back alive and they're all fine. But it was kind of like, there's things that we control, things that we cannot, but for the things that we control, we executed well, and that's how I justified the risk. So it's interesting.
Wow. Yeah. That's a really cool story. That's a really cool story, being part of it.
Yeah, I have a little brooch, like a little patch that they all have. They all put on their kind of gear. So.
All right. Yeah.
Yeah,
Oh man,
so that's my fun story for you on a Thursday afternoon. Yeah.
That's how we start episode 51 with a bang.
That's it. I'll send you the YouTube link. It definitely.
Oh please, yeah, would love to. Would love to share it. Cool. So I just want to know, Raz, what's everyone when they start any down this road, right? As a founder, they don't really start with okay, what, I just woke up in the morning and I'm going to just do this, or maybe some people do, but you never know, right? There'll be someone out there. But why did you start it? What was your what made you want to just go and start it? What is your why to start this awesome, now it's like pretty cool product that you have?
Firstly, thank you on the product front. We're very proud of it. But I would say my journey is not an I. I'd say it's a we, for sure. And I think that like I'd caveat and say, you could, like, I'm not alone in this journey. We have been fortunate to have very strong relationships with the core founders of Stables.
Yes.
And I've known Bernardo for many years before we started Stables. We're, great friends. And even better after we built the business. We've been building the business together, and Daniel as well. But I think philosophically, there's like philosophically and practically my journey to take a risk.
Let's talk about both.
Yeah. So I'd say philosophically, I've always been interested in really making an impact, like in terms of an outsized impact for Erez in the scheme of a human being in the world, but also from a work perspective, I like not to justify why I work hard, but I work hard when I'm passionate. And for me, that has a lot to do with like just contributing positively to the world. So I've done other, volunteering, and I, do other mentorship and things like that. But for Stables, I think that when we were looking at, thematics and trends and impacts, it made a lot of sense in the way that the components were laid out for us as founders to execute on what we thought would change. So you could think, there's blockchain, or there's AI, or there's sustainable housing, or clean energy. That all really interested me. But I thought, where could I execute and make an outsized impact? And Bernardo is a incredibly talented product guy.
Okay.
So when you talk about the product, I focus on other areas. Bernardo is a really, owns it, and we liaise, but it's he's like the guru, the mastermind behind that.
Nice.
And so I think then in terms of stables that we started was I knew Daniel because I helped him with another business that he has. And then, and then I was interested, I was doing kind of more corporate advisory. So I would help you raise money from kind of nothing to settlement. We would do that all through an investment platform online, which is called Equitize. It still exists today. It used to be one of the largest of its kind. Now I think it's maybe second of its kind. But still a good business, right? And so I was advising Daniel, and then we, completed the transaction. And actually Daniel is a guy, and this is obviously rare in business, is a guy who pretty much does exactly, if he says he's going to do something, that thing happens. And that's quite rare. And so we built a good relationship. And then he said to me, like, I want to go and build something to help people effectively kind of save money or make more money, but something to streamline their finances through a PFM app or a neobank. And I was like, I don't think a neobank is like a great business. Like I could think of a better place to burn 100 mil because it costs a lot of money to build a neobank. Bernardo and myself pretty crypto savvy. Anyway, so then we came together and we kind of said, well, stable coins are a huge thing. Look at what's happened here. These are the potential of what we think is kind of going to happen. Like, let's say you're a Bitcoin maxi.
Yes.
You think Bitcoin's going to be $500,000 in a decade from now. It means that stable coins will be at like trillions of dollars in market cap. And
it would, wouldn't it?
With any other number of things too, they'll most likely reach that figure in some shape or form. And so we said, look at all of these digital wallets that exist. We believe that if you embed them from the core in a digital wallet, so you build a digital wallet from the ground up with stable coins, it's costly, but if you get to a point, then you can store a lot of value and transmit it very effectively. And what you see at stables is everything stems from that core. So you're holding stable coins, but you can spend them. You're holding stable coins, but you can send them very efficiently with no middleman. Or convert them back to your bank account very fast, very cheap. And those aren't necessarily like, those are niches. It's not an exchange. You're not coming there to kind of trade and speculate. That wasn't of interest to us. We thought this is a revolutionary thing that's occurring, and and it should do these things, right? It can give people money sovereignty, increase financial inclusivity, reduce inequality, and these things are slowly happening because of technology. And so that's like the philosophical, and in a roundabout way, the practical, I would say.
Yeah, I agree with you there is, because years ago I heard it. I can't remember where I heard it from, but before blockchain, crypto, Bitcoin, for instance, I found it quite interesting. I'm a big history buff. Was the only people previously that were able to create their own currency were, first of all, kings, and then governments, and then Bitcoin come along.
Wow.
Stable coins, you name it, other cryptocurrencies. I can make one, not that it's going to have much value, but there is the first time in history that a person themselves can create their own currency. And when you look at currency, a lot of it is a belief system too, around the world from certain factors. Ariz, you touched base on you love like the crypto blockchain. How did you get in? Like, what was that first wow moment and your journey into the crypto space, blockchain technology?
Yeah, for sure. So, excuse me. So, by virtue of my background, I'm a very curious person, and like in venture capital or whatever I was doing, I got exposure to a lot of different types of businesses by stage and sector. One of those sectors at an early stage was blockchain sector, and I'm not like a cryptographic expert, but in Erez's nuanced way, I kind of wrap my head around it. Maybe like in 2000 and like a little bit before 2017. Okay. And then in 2017, when that ICO boom came along, what we were doing at Equitize, one of the licenses we held was a very new license that was just released, and that was called a crowdsource funding license, which allowed you to take money from anyone in Australia to invest in a private company. An ICO, which is in a security, all automated through a platform, right? An ICO is any person can not invest, but globally in the world, unregulated global stuff. Whereas actually on the ASIC website where it said crowdsource funding at the time, it said this is not an ICO. And so we were kind of running like kosher crowdfunding security things. And so anyway, we actually work with some of the first crypto exchanges in Australia to help them raise money. We got exposure to hundreds of blockchain businesses. And you know, and Bernardo and like, anyway, but early on, ethically, I was kind of like a little bit skeptical because of the kind of little bit of stigma around crypto and like Silk Road. I was like, what are you using it for? They're like, oh, Silk Road. And I'm like, well, that's useful to you, but is that the reason why I'm going to put money in Bitcoin? And obviously kicking myself because I should have or whatever. But
all of us. And that's a good
one. I did like some ICOs and stuff at some points, like little bets here and there to learn more, and then, you know, transition full time, and then it's, you know, right down the rabbit hole.
Awesome, man.
Oh my god. And it's funny, like, you know, Erez, you know, Ben from Collective Shift, and you know, he put this graph today about how Bitcoin is, you know, like going up and all that. And
I saw that around 84% something with 80%.
That's right. And exactly. And I always thought, whenever I look at Bitcoin, I always think like, oh my god, it's so expensive. You know, when some people like, oh nice, you know, but I think you feel like it's expensive, and even though it's come down or whatever, because when it comes down, it brings every other crypto as well, right, with it, apart from stables. You know, stable coins, right? Hopefully, you know. And
well, that's where the stable coins end up getting a lot of their market share coming into downturns, is especially with the banks and fiat off ramps and everything, is, oh, hey, we're looking, you know, it's coming into a downturn, depending on how you look at the market, and it's easy enough to just transfer those funds into stable coins and sit on the sidelines for a bit until you want to easily transition back over.
I mean, firstly, on the Bitcoin from Cozy, like roughly 50% of all Bitcoin trades are done pairing on a stablecoin. Like a significant amount of TTV in DeFi, like today, it's going to be, I don't know. At one point, it was 80% of all TVL locked was in different stablecoins.
That's crazy.
There was 11 trillion of on-chain volume with stablecoins last calendar year in a quasi, you know, transitioning into a bearish environment. But actually, really interestingly, Charlie, that you're talking about people kind of going in and out and sitting on the sidelines. And what's super interesting with stables in the last several months is what you can do with stables is in Australia, you have on-off ramp, so you can deposit and withdraw stable coins. Then you can spend them. right? But the wallet, which maybe, I don't know if people are listening today, one of people in these countries, but actually the wallet, which is just a stablecoin wallet, is live in like 120 countries, 130 countries. And what you can do is, in those countries, you can bridge and swap stable coins. Actually, you can do this in Australia as well. So what we see people doing is, either, let's say you're holding USDC or USDT on Avalanche, Ethereum, Arbitrum, Optimism, Base. So 2 weeks ago, we integrated Base. So you can just go AUD into stablecoin, and in the app, and Cozy, like, you should check it out if you haven't already.
Oh yeah, I already got it. I'm already in, baby.
You can, so you can bridge and swap it out. To the D app. Could be Base, could be your MetaMask, could be any other wallet on those chains. So it's and people are doing this across the world. They're kind of going in and out, sitting on the sidelines, but when they come back out, before they go back into fiat, it's typically a stable coin.
On that one, I don't know if you guys got the data or you're over there on the ground. How do you see the growth of like stable coins, the Stables app, in places like Venezuela, where they're hitting inflation, even Turkey, for instance, where they've got digital FPOS machines where they can use your Stables app? How do you see the growth in those countries from your side, mate?
With what we've done today, the way I describe it is, we've built, and I might have already said this, but pretty much we built a global network to store and transmit value at a fraction of a cent per transaction. With what we've built, you could have like 1,000, or you could have like 1 million people. And my CTO is probably like going, no, you cannot. But like, effectively, it's a decently scalable environment. You could have a lot of people in it, and they can all do peer-to-peer without any middleman at the core. So that's at the core. Once you're in that vault, you can bridge and swap, you can spend, and then what you're kind of talking about, to reach the people in the most useful ways, if you can enable them through real-time payments or card-based payments. So we might have a global network, but what we describe, and I didn't make this up, but it's pretty much, you have go deep and go broad. Because the problem that stablecoins solve is different in Venezuela than it is in Argentina, and than it is in the Philippines.
In African countries as well, right?
African countries, all of them actually have nuanced problems. And what I mean by that is, in Argentina, you have super high inflation and crazy devaluation of currency at the same time. In Venezuela, similar things happening. Whereas, and in Africa, but these guys are underbanked, but they're not like the most underbanked people as well. And they're holding this in cash pretty much. So now you can hold the digital dollar. There are actually, we're not alone in the world. Like, people only do stable coins. There's a few, but in Venezuela and in Argentina, for example, there are apps that exist today. Like Lemon Cash.
Yes.
Good app. Like, you can do now trading and staking and lots of other things. The problems in the Philippines, for example, is the currency is not like it has gone down towards against the US dollar, but most have. So they have decent inflation, but it's not 100% inflation. They have devaluation, but it's not 90% devaluation. It's like 10 or something, but that's across the board. But the Philippine economy, for example, is 70% remittance inflow.
Oh,
wow.
Right? And these guys, majority of them are actually using cash or taking cash out. That 70% is roughly $40 billion every year that goes into Philippines. Which is very interesting. The US is the highest. 26 out of that 40 billion is from the US. Australia accounts for about 5.5 of that 40 billion. So it's actually per capita one of the highest.
We are quite high, yes.
And so if you think about a user's action from Australia to the Philippines is they want to send money. The problem is they're sending money, but they're having erosion of value in the process because of effectively middlemen. And also because of the way that they're touching fiat on either side. So if you can offer, so the problem we solve with stablecoins there is a little bit different. In terms of where we're focusing, we'll have Europe live soon, hopefully by the end of the year. And then we'll have global card on pay in, pay out with the debit card. And that's go broad. So that's through a partner of ours.
Yes.
So you'll be able to pay in and pay out in 130 countries.
Yep.
But by the end of the year, by the end of the year, you'll be able to pay in and pay out via real-time payments in Southeast Asia. So to start the Philippines, and that's really where we're focused on.
I mean, that's just crazy, right? I mean, when you think about that, you just touch base on the app, right? And this morning, I walked in. I saw some news about what you guys done, and then I walked in, and then you mentioned the same thing about stables. That now you guys are also on Google as well, on Android. So well done, because I had the app, I've been using it, and it is seamless.
Yeah.
It's seamless. So well done to you guys. No, seriously, that's pretty good. So
I appreciate that a lot, Cozy.
Yeah.
We are pushing. We have some. It's so exciting because the app is good. People are using it. People really like it. But there's so much more to come, and that's what's most exciting of all for me. And it takes a long time, and it takes. I kind of haven't heard someone say this, but it takes a village. It's not a res, so I can take credit. But as I say to my team, I'll go back and I'll say, guys, just so you know,
now
people told me this today. So I'm humbled, but on their behalf, it's really,
of course,
as I said,
I think exactly right. And it's funny, I shared the video from Steve from Microsoft when he was screaming like developers. So I think we have to appreciate the team who's doing all the hard yards and putting the crazy hours and bringing their passion, their creativity, right? So I think they are the ones who make it shine, but they're the silent heroes behind the scenes. So I think we definitely want to give kudos to the teams behind the scene, and it's unreal. So I just want to touch base a little bit about the app itself. So when you guys develop that app, right? So there's a difference between MVP and a minimum viable product or a minimum lovable product, right? Because it's almost like people think straight away like a MVP is something that we can just put it out there, whatever it is, but it has to be and you mentioned just in your mention just now saying I enjoy using the app, right? For me, it does exactly what it says in the can, and you say oh, this is not even close to the final product, and it makes me super excited. So I feel like almost you guys put something out there, not put something you release the software out there, which does exactly what it does to the without any hiccups. So for me, I feel like you guys did pretty much rather than an MVP, you guys released a minimum lovable product. I would like you to sort of talk to us a little bit about that process and what did you went through. How did you go
through
the
secret sauce in Cozy? I mean, first of all, and this is across the board, right? Pretty much, everything we built with stables and the app, we've all done in-house. Nothing is outsourced. And we take a lot of pride in what we build. There is a lot of testing and incredible amounts of detail and hard work that goes into it. There's no ifs or buts about it. And as you said, like, you know, I'm incredibly grateful to the team pretty much every day for all of the hard yards. And now what's most exciting for us is that we can see people using it, and it is lovable. We like to think so. But it takes time and it takes patience. And I think that the way I would describe it is it kind of is also about when you toot the horn as well. Because I might make a lot of fuss, but you can only do a limited number of things and it's not at its most usable. So anyway, you have MVP and you have minimal lovable. In terms of the way it's kind of gone down and the way we think about it is our go-to-market, like our activities to acquire users, first of all, change significantly as feature sets roll out. So when we started the app and we released it to iOS and Android, it was in February this year. And all you could do in this app was deposit and withdraw. You can't spend. You can't generate a card. And people are still using it, right? Even then. And we get feedback and we refine but we're there building. We're there plugging away at the same time. We're also like, yeah, this is not it. It's still coming. And before you release, so today we released Google Pay integration. So you can automatically administer it on your Android device to your Google Wallet. But actually 3 weeks ago it was Apple Pay. But why don't they come out at the same time? That's not how the world works. It's not how products work, really. So actually the back end, and again, this is not 100% correct, but like most of the things have actually existed from June when you could do the online card, like you could buy Uber Eats and buy Amazon. So in all of the things that we do, it's a product-led company as well. Like we let the product and the data from the product inform how we build the product as we go as well. So when we see people using it in certain ways or get certain pieces of feedback, we take that all on board. And I think that's the reason, like when you go to the App Store, you can see on Apple, I think you have almost 60 5-star reviews, which are kind of, reflective of people enjoying it. So it's kind of like you're always building, you're always pushing, but when you're tooting the horn, there's a logical place to toot the horn. Where people are waiting a little bit, but not too much, and there's a little bit for them to do in the meantime. So that's kind of how we staggered it out.
How did you go with releasing stables to the app stores? I know like some people come across a few problems when it comes to crypto in different ways and what they're doing. Did you find your release pretty smooth on that side?
It inevitably, well, I'd say when building a company, in any block that you see in place, there's like any number of things that were challenging in putting that block in place.
Yeah.
I think that with the App Store, I can't really give you all of the nitty-gritty because again, Bernie is at the coalface. So I'm not really at the coalface, so I can help unblock him, but he's the one who really managed that process. But I would comment kind of that deliberately so, like stables in terms of your crypto businesses, in terms of like a risk spectrum, is well on the lower end because all we deal in is stable coins. We don't do yield, we don't do staking at the moment, but like not at all. You can spend, but that's like a black and white regulatory area pretty much. So in terms of like building strong partnerships and credibility and then, then releasing to app stores and Google Pay, like if you have it strong at the core deliberately, then you will always have problems, but as long as you can persevere and get through them. But there definitely were like little challenges along the way for sure.
Yeah. And I think it's going to get easy along the way. Like Google just came out recently with NFT gaming, and they send a few
yes.
regulations, but I think it will get easy as we go along.
100%. And because you touched base on those things, like I would like to talk about the current market conditions. Like we know at the moment, it's not, all the, the crypto parties gone down. The number of Lambos have, reduced on road, right? So
I'm loving it because everything's on sale.
It's on
no
sale.
one complains when a shop's 50%.
I know, right?
It's just that Charlie's Lambo's in the shop, right?
In the that's it. So I would like to know. So I got like two questions. So the first part of that question is like, how do you see the stables, the market in the next? I would say you mentioned like the next decade. You put a number there. Like some people think like maybe 500,000, like the Bitcoin, right, for the next decade. So how do you see the stables market, growing over the next, say, 5 to 10 years? What's your take on that? If you have any, I don't want to be. This is not about Yeah.
It's highly speculative the longer you go out.
Yes.
I think they're going to come a very long way in 5 years. I think that if you look at the last, I don't know what's going to happen in 5 years. I think that's not the way I think or speculate. I would say, though, the way I'd answer that question is kind of like, if I look back 5 years, they were at less than I don't know what their market cap was, like 400 million?
Probably, in the millions. I don't think
it's billion, 400 million to $1 billion, and now it's at 120 billion, down from 160 billion. Volumes, like even at big numbers, still growing significantly year on year. And then I'm just going to rattle off some other statistics because it then kind of informs kind of where I think things will go. The vast majority of stable coins are all in USD today as well. And they're 90% of them roughly between USDC and USDT. Market cap, and higher than that in volume. I think that today you have a lot of as well, like CBDC interest in one way or another. You have some countries though that are like Australia, for example. We actually have very good payment infrastructure and banking system. So CBDC for retail is kind of perhaps not as front of mind as it would be on a wholesale level, because the low-hanging fruit on a CBDC for one of the banks that drives a 10 basis points efficiency in their international transactions is like 500 million, you know what I mean? So it's on huge scale. So the wholesale side is a huge low-hanging fruit. So I think that will happen to markets slowly. But on the retail side, you'll see some sort of central bank digital currencies where there's more need, where there's less digital payments, underbanking and things like that. But the question is, and this is, I think, where I don't have the answer, where you have historical precedent of like Uber. It's okay. So why Uber? So taxis were how you used to get around. Right? Uber came along, was a little bit in the gray, like really wasn't regulated what they did. The first time that someone really did this, but these guys were regulated, had a huge monopoly, and it sucked as a passenger. And they have no reason to change. Why would they change? They're happy as Larry, and as happy as you could be. They have no reason to change. So these guys come in, disrupt it, give them a reason to change, get a slap on the wrist along the way, but in the scheme of things, created innovation, actually grew the taxi industry as a whole. And so what I think that there's a playoff is there's an entrenched system kind of globally when it comes to currencies. And what you're seeing with stablecoins is a kind of like the guys who are doing it in a private company or a public company or whatever, like Circle, they do it so much faster and can get to market and build the things and entrench themselves. And so what you'll see then is like people can't agree if you're like a big institution on whose interest this is.
Yep.
Like
that's right.
I'm not going to name banks, but like let's say you have four big banks in an economy and they want to collaborate on a stable coin, they need to agree on so many different things.
Yep.
Where the money's held, who holds the money,
Of course.
where who accrues the value, how is it split? Like, but
yeah.
So you have stable coins at the moment in terms of a collateral backed private ones are well ahead of CBDCs, but CBDCs can catch up pretty quickly because they have so much scale out the box, but people need to agree on what that is first.
100%. Yeah. I mean,
but in that meantime, the private ones will continue to go. Then probably CBDCs will come along and there'll be a bit of disruption. And then you've got algorithmic ones, which are just
whole different ball game.
And I don't think that they will be tethered. This is my little kooky theory. I don't think that they'll be tethered to the US dollar or another currency. I almost think
probably to Bitcoin.
Yeah. This is crazy stuff. It's like digitization of money from a piece of paper to a
whole different, isn't it? It's a shift of mindset, right? It's a shift of mindset, how we're going to look at money moving forward. So,
but I think in terms of stables, like the way that we think about how we fit into that is like we've built a beautiful experience for you to do more with your stable coins. We like Circle. We like any number of stable coins. We're effectively agnostic if there's a strong enough reason to use it, either to deposit it in, withdraw it out, or whatever. So we in the back end can kind of, who knows, we don't know exactly what will happen, but we strategically set ourselves up to kind of expose ourselves to as many as the yummy bits as possible along the way.
Now, I think that's it. I think, maybe a couple of days ago, we had a catch up with another person and we were talking about this economy. So we had the CBDCs, you have that economy, and then you got another economy parallel, which is a full crypto economy. And I think it's going to be, pull and push along the way.
Battle of the currencies.
Battle of the currencies. It's not even currencies, it's battle of the, philosophy. It's almost, doing that, and how there's a lot of debanking and all that regulation, all that stuff going on. So it's going to be interesting few years. So my next question to you, Iraz, is that you mentioned like you got like 3 co-founders, right?
Yeah.
3 founders. So when you're like 3 co-founders and when you're going through these like, pretty highs and lows, right? Every 4 years, like crazy cycles with the whole Bitcoin halving, I think. So especially at the moment, it's not, no one is screaming out there. I mean, there are people who are building, but it's not as when they had the bull market. So the bear market at the moment. So in a situation like this, as leaders, how do you guys keep your team motivated?
Yeah, it's a good question. And I think that one that is top of mind in general throughout this, because there are ups and downs building any company.
Yep.
In this space, it seems from a market perspective, it is extremely volatile. And so you want to temper that within your team, but also just be very, in terms of us, like more specifically, first of all, we're not perfect.
So no one is. No one is.
Along the way, and we address them and we say, where we can, we've made a mistake. We're sorry, right? We'll do better, right? But, and I say this as often as I can, like I'm incredible, like actually through the journey, we've retained like maybe one person. We've retained one person, I'm joking. One person is left throughout the thing.
Of course. Yes.
And we're very, or 2, whatever. But like the thing is the whole team pretty much is, except for 2 marketing people we just hired, have been with us through that cycle.
That's cool.
And a couple of the things we did is honesty, right? transparency is super important to the extent where you're like, guys, you need to know, you can relax a little bit. We have runway for X amount of time.
Yes.
In terms of how we actually did it, we drastically reduced runway the moment the moment the market changed. So it gave us time,
Of course,
to speed up the car roundabout now.
Yeah.
When the product was at greater maturity.
Mhm.
But yeah, principally transparency is very important. Probably the most important thing. I think that some founders or some builders sometimes shy away from giving full radical transparency, and that's not just on a numbers level, it's on like a personal level, and like
100%.
Giving, we do team activities. We really worked on culture throughout that period, and we just framed it as like we're building and plugging away. Like, it's a stormy sea outside, but we're in a little submarine, and we'll pop up when we're ready.
Yeah.
And yeah, very grateful that we have good people along the journey. So
I mean, like you said it like perfectly, Raz. And it's funny that I had the same conversation with the team today, right? Um, we had to address what's happening in the market out there. And good things, if we have like good people with a great culture, and as leaders, you have to be radical transparency. And if you are truthful with your team, and if you are sharing, and this is the best thing ever, right? In the startup time in the 90s, it was pretty open. Startup, everyone knew pretty much everything was happening. And then went to the dot-com bust. I mean, start building the companies. I think then we start the whole hierarchy got built. And then a lot of people did not really understand what was really going on with the business. And with the Web3 now we got the opportunity to do that, radical transparency, and everyone to be part of the company. It's not just, oh, we are making the man rich. It's like, okay, let's build this together and share the success together.
yeah.
So I love the fact that you said about the culture, and you use those words, and that's great, to have that coming from you.
I would preface one other thing is there are 3 of us that started it as founders, but we have 2 other co-founders who are
Okay.
Chief Risk Officer, David, who is a bank grade Chief Risk Officer, like he used to run banks, really experienced reg and risk guy. He was actually our first hire outside of the 3 of us, but he's effectively a co-founder because he founded the pillar.
Of course.
Business. And the same for Tony, our CTO, who built
That's
the
cool.
Zip Money and SiteMinder kind of payment rails. He used to work with Bernie as well.
Yeah.
Anyway,
Okay.
just wanted to premise that in case they were listening and
Oh,
gonna bring me up.
of course. Now that's good. I think that's really good, because you touched the risk side of things. So that will be a really good segue to my next question. Is that so? With this, the process of stables and the token, we went through a bit of a token mapping process with the government, with the paper as well, right? And that didn't really get to any point per se. So in this space, how do you guys work through the regulation? Because that's a minefield, right, in itself.
It's a good question. We're still working on it, but look, I think from how we approached it as a venture, as I kind of touched on, was very early on in the process. That was and is top of mind. And so the first person we brought on, aside from the 3 of us, was Dave. And I've known him for a number of years beforehand. And when he saw what we were doing, he got very excited. And then he, and so we actually, when we started off Stables, we actually structured the first, we kind of said, well, and first of all, from my perspective, right, regulation is there for a reason. And not unreasonable reasons, to protect people, to protect your interests, your rights, to ensure we do things properly, that we have, duties that we are accountable for. My background is actually, in fintech, and part of that is the fin side is, you've got to abide by financial service laws for a reason.
Yes.
And, when you, and so I think that you want to bite off where you can chew. If you choose to run a bank, you're going to need a reg and bank team. If you choose to run a payment business, you're not going to have a bank team because you don't need it. It's a little bit different. It's actually quite a lot different. You still need the people there. You still need to approach that reg side.
Yes.
From the outset leaned into it. Actually, we have worked with some of the lawyers that that did the blockchain roadmap, that did the CDR, the open banking roadmap. At Kingwood Mallison, who I think super, super highly of, and Hannah and Scott there. So to start off, we actually structured, what we asked them was, can we build a regulated gateway in and out of DeFi?
Yep.
Where you give us fiat, so you deposit your balance, it accrues a yield, and then you can spend from that balance. But it's not a bank.
Yeah.
It's this. And they're like, okay, over like 2 years, this is how incrementally you could work towards that. But even from the outset, no one's really done this before. It was a bespoke financial services contract that we structured, and we tested it to begin with sophisticated investors. So the reason why I'm telling you that is we have the chops and the, and understand the reason to invest in these areas, and we can navigate to a high bar of regulation. So anyway, when it comes to blockchain in Australia, then, we're not offering yields, and, it's a very difficult thing to do responsibly and scalably. And so we kind of still, it was going to be save, spend, send, earn. But save then kind of goes on the shelf for now. And send, earn. And so in terms of, as I said, like, number one, we have the credentials in-house, which goes a long way. But number two, in terms of the risk that we take as founders and directors, is considered and commensurate. And what I mean by that is, like, we invest in it to protect downside, but also expose ourselves to upside as we navigate these actually shifting sands beneath your feet. That's how it is in blockchain regulation, is that it's changing. You're trying to build a castle with shifting sands. Like, how do you do that? Well, our thoughts on it is that over time, if you have the credentials and the belief that this is something that you want to take very seriously, what you start to do, if you can, is you diversify your regulatory and banking risk across jurisdictions. So you're not actually concentrated in any one given hub that, for whatever reason becomes untenable. You're able to kind of navigate and diversify that risk, is probably the goal of it. So, we are licensed in Australia. We have the license. We also, with MasterCard, do a non-cash payment facility with MasterCard, which covers the spending and some other things. But then we also kind of have Stables EU at the today, which is another licensed entity, and then we're looking at some other jurisdictions to follow before the end of the year. So that's how we approach it, and historically how we've invested and prioritized it.
Cool.
Nice.
Awesome. Any question? I got plenty of questions. I'm just going to fire, but I don't want to take the stage. Center stage.
Here you go, Cozzy.
He's quiet today. He had his wheat bix.
Mate. Oh my God. I know, because this is like, normally we have guests from, we don't have crypto, from the crypto space per se, because, I think you are, Stables coming from the crypto space. You guys are the right people to talk about this. We are like blockchain. We are in the tech space rather than the financial space, and then given your background, I think I got a few questions along that, because now when we still talk to people, they say like, oh, we got digital money already, right? We'll tap and pay. We already have the digital money. So why do we need crypto, right? Why do we need crypto? And then I say, oh, actually we have this thing called stable coins. And again, and that's another thing for them. People are like, oh, Why do you need stable coins? We already got Australian dollars that I'm using. So why do I need this crypto? So I would like you to sort of explain to the non-crypto people what is the difference between using Australian dollars versus a cryptocurrency, whether it's stable coins or Bitcoin. What is the major difference between them two?
Well, I will answer this in my own way that I've kind of understood it.
Yeah.
I'm sure lots of people would say lots of different things. I mean, I would first of all start off, as I said before, like number one, Australia is an extreme, maybe not an extreme, because it's implied if you're an outlier, but they're an outlier. We are an outlier in our payments infrastructure. I would probably give a different example of an economy. What's actually really interesting as well is in India, for example. I don't know if you know about UPI.
UPI? No.
Universal Payment Infrastructure. I mean, I'm pretty sure that's UPI, but anyway, so all the banks in India and so in the Philippines, all the banks actually have pretty good digital rails, real-time payment rails, but between the banks, they don't speak to each other. So 90% of the Philippines use GCash, which is like a digital wallet to move money between.
Okay.
And in India, they have the banks speak to each other. It's called UPI. And then people could build any number of things on top of that. So they actually digitized the rupee really well, in theory. And it's like a crazy statistic. It's like really has high adoption. So I would kind of describe it a little bit as like a stable coin. So first of all, you have Aussie dollar stable coin. So it doesn't need to be, I want to focus on the stable coin part. Like, so
of course.
dollar, like I would think about it less as like a dollar. I think of more as like your dollar note. I don't know if I have $5 yet. I have like any number of fiat here, right? Like I actually went to an art exhibition in Melbourne that's called The Death of Fiat.
Oh, yes.
And
That's awesome.
Is this amazing artist that the gentleman's name eludes me, but it was at Oshie Gallery. And the reason I'm telling you this is all of these stencils he did, more than 100 stencils of these crazy birds from each country. And he called it The Death of Fiat. And the actual paper it was stenciled on was blended paper, money that was turned into these pieces of paper. And so in many countries in the world, that physical paper is effectively worthless. Like you have like 1 billion Zimbabwe, I can't remember what the currency is effectively. But, and so all of these countries have a black market for US dollar. So a lot of these countries are holding US dollar. US dollar is a de facto international currency. So, now it's changing, but 5 years ago, you'd have like 80% of all global transactions are denominated in US dollar. Now it's less because of geopolitical issues.
Of course.
But the reason why I'm telling you this is the stable coin is like whether you have this piece of paper that's worthless, it's more important that actually the piece of paper has no logic to it. It requires, if I want to get it from Australia to the Philippines, it requires, it needs to get on a plane, it needs to, check in this baggage, it needs to pass airport customs in the other country, and that all requires someone checking stuff. Whereas with a stable coin, with a smart contract, you can trustlessly send that money between Erez and Cozy. Cozy could be even in another country, and he'll get the money and I'll know that it's on its way. Or I have that independent trust. A stable coin pretty much just mirrors, the vast majority of stable coins today mirror the US dollar. And so Australia, I would say, has a pretty good digital payments infrastructure. I would think about it as more in terms of the physical $5 note compared to a digital version of that $5 note that can move much more efficiently through the system than that physical one ever could, and have logic built into it that enables it to do much more than just sit in my wallet.
Yeah.
And that
and I think
explain will give me another 4 hours, and we'll get into it.
Yeah, and I think it's also the when it comes to the crypto version of it is that so that you don't have to rely on any third party, isn't it?
Yeah. Oh yeah. When I say middlemen, like middlemen is like, yeah, there's no third party facilitating that transaction. It's Erez to Cozy directly. And that's actually what we built at Stables, which is and send, so so today we had Google Pay out.
Yep.
It's super exciting. Now we have Apple Pay and Google Pay, so there's effectively parity. Next week, Send is coming.
Okay.
So that's going to be really exciting as well.
Oh,
which
that's
will
cool.
be, sorry, peer-to-peer with
peer-to-peer.
Yeah, peer-to-peer with no third parties, no middlemen. So that's exciting.
No third parties. Yeah, I think that's what it is. I think people still don't really understand that core difference, that being peer-to-peer and not having that peer-to-peer, because I think no one ever experienced it.
Well, it's like cybersecurity. A lot of people don't worry about it until something goes wrong to them, and then they're like, "Oh shit!" And it's like that around the world in certain countries as well. And when you find yourself in certain instances or circumstances, and you're like, "Hey, I see what they mean now."
Yeah. And I think especially when it comes to export and imports, right? I think they're the ones who had this experience where when you do a bank transfer, how long it takes on that side, and it lose the money, and it's charged like a lot of money. Like when you're putting like $200 or something, you get charged like $10 or something like that, crazy. Just do a transfer.
The average cost of a remittance sub $1,000 is like 10 to 15%.
That's crazy
for the little guy. And so I'm like, well, what do you mean we can out the box like give it to them for like max like 1.5%? I'm like, and it's faster. And so then they ask me, they go, but then why a stable coin? And that's kind of maybe what you were asking before, which I gave a hibbledy answer to. But I just say, look, a stable coin, it's a digital dollar. And the reason why we do it is to remove middlemen in the process, to give you more speed, security, and cost effectiveness. So it's astounding how much people pay sending money overseas and how long it takes sometimes.
100%. So we are just gone over an hour, so I only got one last question. Charlie, you want to take a question or
the last question? What would your advice be for other builders in the space?
It's a broad question.
From your experience. Let's say from your experience.
No. And I don't mean to be. It's okay. It's a good question. It's okay. Don't worry. Look, there's a couple of things. I have two things, and then I give a lot of analogies, and a lot of people are sick of them, but I keep on going anyway. But pretty much,
love it. Own it.
The first analogy I would use in building is there are two different things. One is being able to build a good business, and one is being able to package up the business. What I mean by that is I come along to Cozy and Charlie on a Thursday afternoon, and I put a parcel on the desk. It's the best looking present you've ever seen. It's the best looking present. You open up the present, and it's not very good. I don't know. I would normally say a pile of poo. There's pretty much a pile of
poo. No, you would not do that.
Right? But I wouldn't say that on this channel. Like pretty much, there's two different things. And what I mean by that is a lot of people, and this is, my background's in investing and raising, I think that's a lot to do with building. I also think that in terms of building, there's two different things, is building a good business and the ability to kind of package it up really nicely. You might not be able to package it up so nicely, but if you've got something significant inside, even if I hand you this package, when you open it, you'll be like, wow, these guys have done their homework. And also like, there's a business here. So that's kind of and I think a lot of people really focus on the packaging. So I would say focus on the building the good business. For example, we worry about the things that we really need to worry about. Early on, we were like, okay, what should we call the business? And then we thought, well, actually, if we get this wrong and this is the reason why we fail, well, then we've done something else wrong. Do you know what I mean?
Yeah.
So we can fix that later. So my second point, speaking to that, is, along that journey of building a good business, a builder will have any number of things that they should be doing at any given time. And it's almost like someone hands you a stack of work that's going to take 10 hours, but you have 1 hour. What do you do?
Yep.
Well, someone would just randomly go through that 10 hours of work and obviously have 9 hours still to go.
Yeah.
Just go through it randomly. Well, but then other people, what they'll do is they'll sift through that pile of work and they'll prioritize and only get the things done that are most important. However, we know that in that next hour, you're going to have to go and do you're going to have 10 hours of things that you need to do in that hour.
Yes.
And what's least efficient is you having to revisit what you have done in that first hour. And so in terms of building that business, the little blocks that you put along the way, the ones that are foundational are key to what will come at later stages. And what I mean by that is, if your core blocks that you've laid well are, I've built a good team, the team is competent to build a great product, community, stakeholders, security, regulation, those blocks. Fortunately, we've been able to build on top of those over time and not have to revisit the core fundamental things, which allows us over time to have more time to focus on what is most important. And I think that as a founder is one of the largest challenges you have, or as a builder.
That's pretty cool.
Yeah, couldn't agree with you more there.
Don't get me wrong, I'm revisiting blocks every day, so it's not like we're perfect, but I'm very grateful. That's my mental model of kind of how.
No, that makes a lot of sense, and I think, like you said, at the end, you said, like, you want to revisit those blocks as well. I think that's super important because your company is like you said, it's a village, right? You need a village to build this product.
Yeah.
And if you don't constantly review those blocks and see, like, oh, are they still good? Are they still the same blocks to go to the next level, or do we have to create new blocks, or do we have to strengthen those blocks, whatever that needs to be? I think reviewing those rather than building on on a foundation that is not strong, I think that's a recipe for failure. So wise words. Very wise words.
Yeah. No, thank you. It's a lessons through battle. So I'm always happy to talk about it. Yeah, for sure.
Yeah, awesome. All right, thank you so much, Iraz. And before we finish, is there anything else that we did not touch on that you would like to tell the community?
Well, just firstly, it's a shame because I thought we had another hour for me to ask you questions.
But, right. Definitely. We'll jump on different podcasts for that.
I think, look, firstly, thank you for having me on the show. I appreciate it. We're a team in Sydney, but we take a lot of pride in what we do and have big ambitions. And people who make time for us along the way, I, first of all, really appreciate that. Second of all, to our users and our community, I'm very grateful to all the support, time and trust that you put in us. We don't take that for granted, and we're looking to, continue to deliver and exceed your expectations where possible. But if there's any feedback, we're always open. So please reach out on Intercom or my emails you can reach out through the app with live chat, or my email's erez@stables.money. But otherwise, we've got Google Payout, Apple Payout. It's a pretty cool product for Australians. And then there's a lot more coming in the coming weeks and months. So stay tuned.
Awesome,
mate.
Thank you so much, Iraz, and thank you very much for everyone who joined. And I hope, because I know that I did, I hope everyone else got so much value by being part of this session, because we are at the cusp of that shift where the money, the banking, the financial system, and we're going to look back in 30, 40, in the next 100 years, look into these days and, find out, okay, who were the people who were disrupting this thing called money, the framework.
Renaissance?
The Renaissance. I mean, yeah, exactly. It's a big word, but yeah, you know what I mean? And it'll be, and I can look back and say to my, I don't know, great grandchildren, oh, you know what? I met this person called Iraz, who was one of the pioneers in, and Stables. We don't leave out your co-founders, and the company called Stable were one of those who helped to disrupt this ecosystem and open people's eyes into more new ways of transacting. So I am so pumped, man, and well done to you and your entire team, including your co-founders of you and your other 4 co-founders. So
Thank you.
Well done to you guys, and
hopefully this is not the last time, so that
no.
The thing you tell your grandchildren is not, one time we met him for a little bit and away he went. No, we've got to check in on that journey and say you were a part of it, buddy.
100%, because things are moving so fast.
Yeah.
So, and again, thank you to everyone from all our social media platforms for joining us today. And we value everyone's comments and reviews. Just as Iraz said, we are always open to receive everyone's input, because that's the only way leaders can grow, is by listening to the community, listening to the people around them. Because sometimes leaders do trip over their own shoelaces, and we always look for not validation, but the support from our communities as well to grow. So on that note, again, guys, everyone, thank you so much. And Iraz,
and download the app.
And download the app.
Check it out. It's awesome.
It's awesome app, and I think we'll put some information from this podcast as well. And awesome.
Legends.
All right, guys. Thank you so much. Thank you for your time.
Great evening.
You too.
Everyone.
See you, Raz. Thank you.
See you, Riz. Thank you, mate.
Thanks for tuning in. We'll see you next week. Same time, same place.
Subscribe.